All right, so we're going to talk about the loan manager in QuickBooks. Now this is available depending on your year, depending on your version. Sometimes it's available, sometimes it's not. But the loan manager, if you have access to it, it'll be under banking. Okay, then you'll see your loan manager there. It was enterprise only for a little bit, and then it was enterprise and accountant, and then it was available in some years. But so if you see your loan manager in there, I think it's available in all years right now. I mean, all editions right now. If not, give us a call. We can get you the proper edition. And when I say each edition, I mean desktop, not online yet. Okay. So the first thing is you can't just go straight in and create the loan. You have to have the balance on your balance sheet first. So we want to go to our chart of accounts, and we want to have a liability account, right, for the loan. So in here I have an auto loan account, and I need to create the entry, right, for the loan. So essentially, usually, right, I have a loan that's created. I pay, whoever, Department of Automobiles. The loan balance is going to go up. I owe $50,000. The offset is generally going to go to a fixed asset account, right, for your automobile that you actually purchased. Now, of course, this is not the best way to do it as a journal entry. You should be going in and using your fixed asset item list to set it up so that you can use the fixed asset manager through QuickBooks Enterprise. That is Enterprise and accounting editions only. But I'm just going to put it as a journal entry just so we can get it in there for now. Okay, so I bought a $50,000 auto truck. I owe $50,000 as that liability. Okay, so now that I have it set up on my balance sheet, I can go into the loan manager. Okay, so I'm going to go ahead and add a loan. It's going to ask me which account, right? So I'm going to pull that auto loan account, and notice that it pulls the current balance for that account. So again, you have to have a balance in there in order for it to start to set up this loan. Then you choose who the lender is. Okay, so who are you going to be getting bills from? The origination date. Okay, so what was the date that we purchased it? The original amount. So if we paid $70,000 or something like that, $20,000 down, or maybe you're setting this loan up mid-term because you didn't know that we had this ability to set loans up in QuickBooks. So you want to say what the original amount was in there, but I'm just going to leave it $50,000. Okay, the term is how many years or how many months. So I'm going to say it's 5 years, not 50, 5. And then I say next. So I want to put in the date of my next payment. So my next payment is due January 1st. The payment amount. So usually when you set up or you have an auto loan or equipment loan or something, they give you what your amount's going to be every month that you're going to pay. So let's say I'm going to pay principal and interest amount, so $1,500. And then the next payment number is number 1. Again, if you're setting this up midway through the loan, you might be at payment number 13, 14, something like that. And you can still set the loan up in here even though you're midway through. So the payment period, we're going to pay monthly. You do have some other options in there, right? Semi-monthly, etc. Does this loan have an escrow payment? Yes or no? So I'm going to say no, because usually on auto loans they don't, but if you had any kind of escrow payment, you can add that in there. Then you can say alert me 10 days before the payment is due. I'm going to check that off for now. Then you can give the interest rate. So we're going to say 10.5%. Whoops. And then compounding monthly, or if it's exact days. Okay, it's going to do, if it's exact days, you can change it from 365, 360. I'm just going to say monthly for now. The payment account, so where do you pay, right? When are you going to pay this loan? Where you pay it out of? The interest expense account. So again, this should be some kind of expense account in here. I'm just going to put it to bank service charges for now. Oh, it's not going to let me. So let's say other expense for now. Okay, and then we can say finish. Oh, fees and charges. So if there are any fees and charges, expenses on top of it, like an admin fee or something like that. Okay, so now I've set up my loan in here. Then what you can see is you can see our payment schedule. So basically what it says is that we're going to have $1,062.50 of interest or principal, $437 of interest, and then it's going to show our balance. So that's payment number 1, 2, 3, 4, 5, and it takes you all the way down to the bottom, right, to get it where we pay it off. Okay. All right. So it'll amortize it for you when those payments are entered, which is awesome. Okay, so that is the loan manager. Of course, you can set up many different loans, right? And it'll keep track of them all separately. You can look at the payment schedules separately here, and you can print them out, etc. You can also remove the loan if you're done, but you can see here, I can go in, set up the payment. I'm going to write the check, and it'll pick up the amortizations for me, which is awesome.